Hello, good afternoon or good morning. In this video, we'll talk about financial statement analysis, specifically for specialized industries. No? So for this video lecture, we'll talk about the peculiarities of financial statements of banks, utilities, real estate companies, and conglomerates. No? Essentially, financial statement analysis and ratio analysis, the same process applies to these specialized industries. No? The same kinds of ratios um, are generally used in these industries also. However, these industries might have peculiar financial statement items. No? And so this lecture seeks to provide a little bit of clarity on the differences or the subtle differences. Some of them subtle, some of them not so subtle. Differences of the financial statements of these of companies coming from these industries. Okay, so we start with banking. So banks. So first, we need to understand what is the business model of a bank. Okay, so this is something that we've already discussed in the first video, actually, wherein we discussed the flow of funds in the financial sector. Okay, so for a bank, these are the bank sources of financing. Okay, so the bank sources of financing are primarily deposits and borrowings. So primarily deposits and borrowings. So they get funding from deposits from its customers. They get funding from borrowings. They also borrow. And actually not included here is equity infusions from its owners. So if you look at the credit side or the liabilities and equity side of a bank, it will be composed of debt and equity still, but for debt, we will see deposits and borrowings. For equity, we'll see the normal equity items. So those are the liabilities and equity section. What is the business model of a bank? A business model of the bank is to obtain cash from various sources, right? And once they have that cash, what do they do with the cash? They invest it. How do they invest it? They loan it out, okay? Or invest it in securities, okay? Or invest it in money market placements. So kumbaga, the business of a bank is not to build a facility or build a plant and then produce something. The business of the bank is once they have the money to loan it out to people who need money. And when they loan it out, what do they get in return? They get interest income in return, right? And so the major revenue sources of a bank is not revenues, just like similar to a merchandising operation, hindi ganon. The main revenue generation of a bank will come from interest income from its loans and receivables. Okay? And so, if you will see the financial statement of a bank, it is very much heavy in terms of loans and receivables kasi yun talaga ang main revenue generation opportunities of banks. Of course, they can also invest that excess cash to securities. They can invest it in stocks or invest it in bonds, no? And as investor, they will receive interest income also out of that, or they will receive dividend income if they invested in stocks. So securities, particularly financial assets. Placements are money market placements, and we discussed this last time. So these are short-term sources or short-term investments. Okay? So essentially that's the business model of a bank. And when you see the financial statements later of BPI, you will see that it is evident in their financial statements that this is their business model. Okay? When we talk about the Philippine banking industry, banking is divided into several types. So there are universal banks, commercial banks, thrift banks, rural banks, cooperative banks, and Islamic banks. So we'll not define them one by one. No, it's not our goal to define each one. Pero banks essentially, they take in deposits and then those deposits can be used for loans. Okay? And that is their main source of business. Non-banking institutions, non-banking financial institutions simply means that they are not taking in deposits. Insurance companies are not taking in deposits, right? They are receiving what's called insurance premium. So pag bumili ka ng insurance, you pay the premium. Yung premium na pupunta sa insurance companies. And that premium, yun ang source of funding of an insurance companies na pwede niyang i-invest or pwede niyang ipautang. Okay? Investment houses, financing companies or leasing companies, lending investors. No? So in other words, these are the same kind of business model na nagpapautang. Right? Lending is essentially the business model. Pero yung source of funding niya cannot include deposits. Kaya sila tinatawag na non-banking financial institutions. Okay? Now, ito lahat to, they can take in deposits. Right? That's why they are banking institutions. No, however, iba-iba sila ng size. Ang universal bank, mas malaki sa commercial bank. Ang commercial bank, mas malaki sa rural bank. No? So, usually, these are all related to size. No, yung kanilang mga differences. Okay? So let's look at the financial statements of a company like BPI. Now, the balance sheet of a bank is called the statement of condition. So iba yung pangalan. That's the first thing that you will notice. Okay? It's not called the balance sheet. It's called the statement of condition. Okay? And its assets are not necessarily classified as current and non-current assets. Right? So if you look at this FS, this is a direct screenshot from the submitted financial statements of BPI in the Philippine Stock Exchange. Okay? So if you look at this, nakalagay lang total assets, then dito sa dulo, total assets na agad. There is no delineation between current and non-current assets. So that's one peculiar thing that you'll see in a statement, in the financial statement of a bank. Okay? However, these financial statements or these financial statement items are still organized according to liquidity. Okay? So the most liquid assets are first and the least liquid assets are in the last portion of this listing. Although hindi nakalagay na specifically non-current ito or nakalagay specifically na current ito. So therefore, since walang current and non-current, you cannot compute the usual current ratios, right? So kaya meron tayong special ratios for banks. Okay? So let's look at the different line items. So what's cash and cash other cash items? Madali lang, edi cash as you know it. Right? Now, what is due from Bangko Sentral? So due from Bangko Sentral ng Pilipinas includes interest-bearing deposits with the BSP to meet the reserve requirements and to serve as clearing account for interbank claims. So yung due from Bangko Sentral, as you know, there are reserve requirements for banks. That's part of monetary policy of the Bangko Sentral ng Pilipinas, right? They can require all banks to deposit to the Bangko Sentral a certain percentage of their deposits as required reserves. And when they change the required reserves, it affects monetary policy. Okay? So as such, yung due from Bangko Sentral na yan, ito ay pera na nakalodge at the BSP for reserve requirements. Okay? Now, second, due from other banks. No? So sometimes, banks have deposits with other banks. Why? Because it is to facilitate transactions between these two banks. Okay? So if there are frequent transactions between BPI and Robinson's Bank, for example, they may require deposits from each other so that if they have transactions, they can easily transact kasi meron ng account with that other bank. Okay? So essentially, it's a receivable. Ito rin, receivable din yan due from Bangko Sentral. Okay? How about interbank loans receivable and securities purchased under agreements to resell? Okay? So those are accounts extended to other banks overnight or on very short terms to meet legal reserves or other liquidity requirements. Now, in other words, again, to facilitate transactions between banks. Okay? Now, the next, financial assets at fair value through profit or loss, financial assets at fair value through other comprehensive income and investment securities at amortized cost. Alam mo na yan. Because this is the usual na financial assets na you studied in 99.2, right? There are several types. Financial assets at fair value through profit or loss, through other comprehensive income, and at amortized cost. So it's the same as what you know in 99.2. Okay, so it's nothing different. After that, there are loans and receivables. Loans and receivables, of course, are amounts due from customers or borrowers. Okay. It can be classified into demand loans, time deposits, bill discounted, real estate mortgage loans, agricultural loans, etc. So, marami ng klase ng loans yan. So, lahat ng loans and advances nandyan sa account na yan. So, if you look at this, financial statements, no, the main asset of a bank ay loans and advances or loans and receivables. Okay? This is in millions. So that's 1 trillion, 1.4 trillion pesos of loans and advances. Okay? And that's the main source of cash or main asset of a bank. Okay? Assets held for sale, no, are assets na pwedeng nirimata, foreclose, and they are uh, being sold, no, as part of its liquidation process. So it may represent real and other properties that are not being used, no, by the bank or held in its investment portfolio which were required by the bank in settlement of loans or for other reasons. In other words, assets that are due for sale kasi part ng na foreclose na properties. Okay? Next, bank premises, furniture, expenses, and equipment. In other words, this is PPE, right? Pero ito na nga lang ang mga premises, furniture, fixtures, equipment na ginagamit ng bank itself. No, kaya nakahiwalay siya sa assets held for sale. Yung assets held for sale might be assets that the bank is holding but its objective is to sell it kasi kailangan niyang i-liquidate para mabayaran yung mga receivables, mga pinautang niyang loan. Okay? Pero ito, these are assets na ginagamit niya mismo. Okay? Of course, investment in subsidiaries and associates. Associates, alam mo na yan. No, we'll discuss subsidiaries later. Okay? Assets attributable to insurance operations and deferred income taxes. Okay? So these are, hindi na ito masyadong liquid, not very liquid investments. Okay? Or assets. Okay? So kung nakita mo pa lang yung itsura, iba na yung itsura niya. So ang hirap computan ng ratio kasi iba siya sa alam mong ratios. Okay? So let's look at liabilities and equity. If you look at the liabilities and equity of a bank, again, there is no current and non-current liabilities, similar with the asset side. If you look at this one, what is the biggest liability of banks? 1.7 trillion. Deposit liabilities. Okay? Kasi the main source of financing naman talaga of banks are deposits. Okay? Pag nag-deposit ka sa bangko, may utang yung bangko sa'yo, di ba? Kasi kailangan mong ibalik yung pera sa kanya, sa customer. Right? Kailangan ibalik ng bangko yung pera sa customer anytime. So that's why deposit liabilities are liabilities of the company. Okay? So there could also be interbank loans payable. Okay? There could also be due to BSP. Due to Bangko Sentral. So this account includes the following liabilities: tax payments, custom duties collected by a bank for the Bureau of Internal Revenue or Bureau of Customs, amounts due to BSP for the cost of supervision or examination, amounts due as agent for the sale of government securities and other liabilities to the BSP. Okay. So also, one thing that you will see are managers' checks and demand drafts outstanding. No, managers' checks are outstanding checks drawn by the bank upon itself. So it's check pero ang liable sa check na yon ay siya mismo. And so it becomes a liability. Okay? So we'll limit our discussion there because the rest are too complicated for your accounting level. No, but those are the most important that you need to understand. Okay? Now let's go to the income statement. So the income statement of a bank is called a statement of income. Okay? So if you look at the sources of income, the main source of income of a company is called interest income, right? So as I mentioned, there's interest income from loans and advances, yung investment nila, yung mga financial assets na ininvest like FVTPL, OCI, and amortized cost. So those might have interest income and so meron yang interest. Demand, yung reserve requirement with the BSP, may interest din naman yon. So the interest income is 1.9 billion pesos. Okay? So the main expense of a bank is the interest expense, the amount that they pay you for providing funds to the bank. Okay, so here if you look at deposits here, interest expense on deposits is only 18 or 19 billion pesos. Kasi maliit lang naman ng interest sa deposit, right? At 0.1%. Right? So therefore, maliit lang talaga yung interest expense nila sa deposits. If they have other borrowed funds which have interest, then kasama yun sa interest expense. And one thing that you will see here is the line on net interest income. So yung net interest income is equal to interest income less interest expense. So parang ito yung equivalent ng gross profit, right? Diba, in a normal merchandising operations, revenues minus cost of goods sold is gross profit. Okay? Ang equivalent ng gross profit sa bank is NIM or NII pala, which is net interest income. Okay? Another major expense item for banks are provisions for credit losses. Okay? Or essentially, these are provisions for non-collection. Right? As you know, in your 99.1, no, receivables need to be estimated in terms of collection. So the portion that's estimated to be not collectible, binubook as doubtful accounts expense or bad debts expense. Sa bangko, ang tawag doon, credit losses or impairment losses. Okay? So the provision for credit and impairment losses, ito yon. So in this case, 28 billion was the provision for credit and impairment losses. Napansin mo, ang laki ng provision, right? Versus noong 2019, 5 billion lang. 2018, 4 billion lang. Naging 28 billion. Right? Why do we expect that? This year is 2020, which is the COVID pandemic. So maraming hindi nagbayad ng principal and interest during this period. So because of that, lumobo rin yung provision for credit losses. Okay? So meron silang net income after provision for credit and impairment losses. And then ito na yung mga OPEX. Other income pala to, sorry. Other income. So ito yung mga income na hindi interest income by nature. Like fees and commissions. Okay? Like securities trading gains and losses. So pag buy and sell sila ng marketable securities or ng financial assets. Income from insurance, etc. Okay? And then dito, ito na yung OPEX. Ito na yung related to the operations of the company. So they spent 48 billion for it, right? Primarily on compensation and fringe benefits. Okay? So their profit before tax is 25,769. Hindi ko na nilagay yung mga after that kasi parang normal na lang siya. Kasi profit before income tax yun. So income tax expense, and then net income, then earnings per share. Yung sumunod dyan. No, pinutol ko na kasi masyadong maliit if I include them. No? But essentially, that's what the statement of income of BPI looks like. Okay? So given that the financial statements of a bank is so different from regular companies, no, or normal merchandising or manufacturing companies, how will we adjust our financial statement analysis? So essentially yung theme, pareho pa rin naman. Nag-iiba lang yung ratio na kukumputin. Okay? So here is the leverage ratio, or we call it capital adequacy ratios. Okay? Important sa bank ang capital, right? And it is a critical component of a bank's risk level. Kung maliit ang kapital ng isang bank, mataas ang risk ng bank na yan. And that's why the BSP requires a minimum capital adequacy level, right? That's why it's very important. Okay. Now, banks usually have what's called a capital adequacy ratio. We call it CAR. Okay. Ito talaga yung nire-require ng central bank na ratio for calculation. However, yung mga inputs niya hindi nakikita sa FS. Kaya hindi ko na nilagay dito. Right? But actually, most banks will disclose their CAR. Okay? And the minimum CAR, according to the central bank, is 10%. So their CAR should not be below 10%. It should be higher than 10%. And the input sa CAR, hindi siya nakikita sa FS, special computation siya. Kaya usually, dinidisclose na lang yan, yung amount itself. Hindi na siya nako-compute. Okay? But essentially, ang capital adequacy ratio naman, okay, is asset over equity. No, more or less ganyan yung, equity over assets, yung calculation. So this calculation cannot be lower than 10%. Pero yung component ng equity, medyo special. Component ng asset, medyo special. So we're not able to discuss that. No, kasi wala sa FS. Okay. What are some other capital adequacy ratios? Of course, we want to get the equity to assets ratio, total equity over total assets, okay, and equity to loans ratio, total equity to over total receivables. Okay. The idea is kailangan may enough equity ang isang bank para if there are losses, no, it will not result, no, to bankruptcy. Kasi kung maliit ang kapital ng isang bank tapos biglang nagka-bank run, right? Meaning biglang hindi nagbayad, masyadong maraming borrowers di na nagbabayad like now sa COVID pandemic, right? 50% ng loan ng borrowers mo hindi na nagbayad. So biglang ang lalaki ng losses, right? Kung sobrang laki ng losses that it wipes out equity to zero, okay, or to negative, that is a source of reason for filing bankruptcies, no? Or isasabihin mo insolvent ka na. Gustong iwasan 'yon ng Bangko Sentral. So therefore, dapat adequately capitalized ng isang bank. Okay? Na kahit na medyo may significant ka ng drop in loss in payments, you're still able to absorb those losses kasi robust ang equity position ng isang bank. Okay? Of course, another measure for banks that's very important is the liquidity ratios, no? Natural, right? Dapat liquid ng isang bank. So, a bank should have adequate liquidity to support its deposit operations. Since walang current ratio ang isang bank because there's no current assets, okay, usually these two are the main determination of liquidity. So number one is the QLAR or the quasi-liquid assets ratio. So that's quasi-liquid assets over total assets. What are quasi-liquid assets? Ito, dinefine na dito sa taas. Okay? Quasi-liquid assets are cash, due from BSP, due from other banks, interbank loans receivables, and all financial assets. So yung FBTPL, OCI, and amortized costs. They are all included in the list of quasi-liquid assets. Why are they liquid assets? Because it's easy to convert them to cash. Why are they quasi-liquid? Kasi hindi naman talaga siya ganun ka-liquid. Like, for example, financial assets at amortized cost. Sometimes it's difficult to sell that kasi kailangan private placement rather than selling it in the exchange. Right? So if that's the case, hindi ganun ka-liquid, pero at least may bibili niyan. Right? No, mas madaling ma-determine na medyo mas liquid yan than other assets of the firm. Okay? So that's why we use quasi-liquid assets in this calculation. Okay? The other one is the loans to deposit ratio. How much is total loans over total deposits? Okay? If this ratio is greater than 1, what does it mean? Okay? Mas marami ang loans over deposits. So for example, 1.3 over 1. Okay? Is it a sign of more liquidity or less liquidity? It's a sign of less liquidity, right? Why is that the case? Kasi kung masyado ka maraming loans need to be collected. Okay? And therefore, yung loans, depende yan sa maturity of the loan. When is it going to be collected? Right? Loans are not liquid assets. However, your deposits are demandable anytime. Right? Technically, if you go to your bank now and you say to your bank, I want to get all my money, the bank should be able to provide you with that cash. No? So having a high loans to deposit ratio means you have a lot of illiquidity relative to a liability that's fairly demandable ASAP. Okay? So therefore, medyo delikado ka. Okay? Usually also a high loans to deposit ratio shows that a bank is aggressive, no, in its lending operations. Okay? So high LDR shows aggressiveness, high LDR shows lack of liquidity. Okay? And therefore, if you're looking at a bank wherein the LDR is so high or accelerating in a very fast pace, then you should be worried kasi baka mamaya magkaroon ng maraming provisions for non-collection later. Kasi pag aggressive ang bank, ibig sabihin, baka mamaya nagpapautang siya sa mga dapat hindi naman pala creditworthy. Right? And so it needs to be tempered also. Next, coverage or asset quality ratios. No, so for asset quality or coverage ratios, this is very important, no, especially asset quality. And in the point of view of banks, asset quality pertains to collectibility of receivables. Yan talaga ang concern nila. Okay? So asset quality refers to the ability to collect those loans and receivables since they are the main income generating assets of a bank. No? If there are doubts on its collection, then that loan becomes a non-performing loan or NPLs. Okay? When is a loan reclassified as an NPL or non-performing loans? If it is non-accruing. No, it is it's no longer accruing interest because they are past due or in litigation. Okay? Hindi na nag-accrue ng interest receivable or ng interest income because past due na, hindi na talaga nagbabayad or under dispute na yung loan. So hindi ka na pwedeng mag-accrue because nawawala na yung probability that you'll receive the benefits of interest out of this loan. Second, restructured loans, loans on which the original terms of the loan have been changed to ease the payment burden. That's called a non-performing loan. Okay? And if na-repossess na. So repossessed real estate and other assets from defaulting loans, yung loan associated with the repossession or with the foreclosure of the collateralized asset becomes a non-performing loan. Okay? What are the factors affecting asset quality? So obviously, number one, degree of asset diversification. If you're more concentrated in one kind of customer class, then your asset quality decreases. So for example, sa iyong loan portfolio, masyado ng heavyweight, 50% or 60% na is loans to real estate companies. Okay? So medyo malaki na yung weight na yun sa total loan portfolio mo. No? And that increases or decreases rather asset quality. Kasi pag nagkaroon ng industry-wide issue ang real estate sector, then 60% ng portfolio mo ubos. So therefore, bumababa yung asset quality mo. Okay? Exposure to troubled industries. Kung nagpapautang ka sa mining nung time ni Gina Lopez nung 2017 or 2016 in DNR, troubled industry yun during that time kasi sinuspend niya lahat ng mining contracts. Right? So exposure to a troubled industry increases the probability of default. And so therefore, decreases asset quality. Exposure to troubled markets. No? So for example, you have a lot of loans to companies in Afghanistan, right? That market is troubled right now because of their political issues. No? So with that, pag malakataas ang exposure mo sa mga ganong klaseng markets, then bumababa rin ang asset quality. Large loans also. Kasi pag large loans, tumataas ang concentration risk. Okay? Tumataas ang concentration risk ng isang company if the loans are large. And because of that, bumababa ang asset quality. Okay? Another determination of factors affecting asset quality is growth of the loan portfolio. Okay? You know why? Because high growth of loans, high growth of total loans usually imply that they are lax in applying credit procedures. Okay? Usually yan yung impression. Okay? Pag mataas ang loan growth, meaning if you see the trend of loans and receivables, ang tataas ng increase relative to historical levels or relative to the market or relative to the business conditions currently. Okay? Then baka mamaya, kaya pala ganun is masyado ng lax in their credit policies. And so it will ultimately impact asset quality. Okay? Kasi eventually, yung mga nakalusot lang kasi lax ka sa credit procedure mo, okay, will eventually default in their loans. And so therefore, bumababa yung overall asset quality. Okay? So these are some ratios that indicate asset quality. So first is the NPL ratio. Total NPL or non-performing loans over total loans and advances or loans and receivable. Okay, so of course, the higher this percentage is, the less is the asset quality. Okay. Next is loan loss reserves ratio. So allowance for impairment over total NPL. The higher, the less asset quality. No? Next, NPL divided by fair value of collateral. You want this to be less than 1 because you want the fair value of collateral to be higher than the NPL, right? So you want this to be less than 1. That is the good news here. If this is more than 1, ibig sabihin you have more NPL versus the value of collateral. No? So that's a problem. Okay? These items, yung NPL, impairment, fair value of collateral, these are all included in the notes to the financial statement of banks. Okay? That's where you'll find it. What are other ratios related to banks? Profitability ratios, of course. No? First is the net interest margin. So parang profit margin pero hindi ganon. Okay? Ang computation niya is net interest income, which is interest income minus interest expense, divided by total earning assets. Ano yung total earning assets? We'll go to the next slide. So ito yung total earning assets due from BSP, due from other banks, interbanks loans and receivables, securities, financial assets, and loans and receivables. In other words, ito yung mga investments na earning ng interest income, right? So kaya ang tawag sa kanya, earning assets. And that is the denominator here. Okay? So that's net interest margin. The rest are like variations of the usual ratios. Here is operating ratio. So operating expense over net interest income plus other income. Of course, the higher this is, the worse. Okay. OPEX to total assets, as the higher this is, then it's bad news. Okay. Return on total assets, the higher this is, good news. And the higher this is, good news. Okay? So, if napansin mo, halos pareho lang naman yung return on assets and return on equity. Right? So, pareho lang sila. Okay? Okay. That's all for banks. No? Let's go to electric utilities. For utilities, if you look at the financial statements of Meralco, what is one thing that you will see here that is out of the ordinary? Okay? First is that you will see that their assets, non-current assets and current assets, baliktad yung order. Nauna yung non-current assets versus current assets. Right? So, nasa IFRS din naman yan. Kasi sinasabi sa IFRS na if in a business, the non-current assets are more important than current assets, then they should be presented first. Okay? So, yun yung nangyari dito. Because in a company like Meralco, non-current assets are the lifeblood of the business. Okay? Investments in lines, no, electric lines, plants, etc. Right? And so they are the star, quote unquote. So they should get first billing in terms of the financial statements. Pero yung definition naman ng non-current assets and current assets, same pa rin. Okay? So if you look at the non-current assets, the main item there are utility, plant, and others. So these are all the PPE related to electricity distribution. Okay, so that's the critical component of the balance sheet. Okay, and that's the main item. And so they have a lot of cash and receivables. If you look at receivables, lumobo rin, right? Because of the COVID-19 pandemic. Okay, so yung liabilities and equity, there's nothing different, so I'm not going to show it. Okay, so if we go to utility, plant, and others, which is note 6, ito yung makikita mo doon. So it shows you the kind of assets where Meralco invests in. So 109 of its 150 billion investment is in sub-transmission and distribution, which is its main business. Okay. Ang next is construction in progress. Also, as you know, yung construction in progress, diyan nakalagay lahat ng in progress. Once they're completed, i-distribute sila. Depende kung anong klaseng PPE sila. And most of this, I believe, is also sub-transmission and distribution. Okay? So it's really the main asset type for Meralco. Okay? If you look at the income statement of the company, nothing different, no? But if there's something that you will notice, there's a portion here called purchase power. Okay? And that purchase power is lower than the sale of electricity. Okay? Ano yung sale? Sa sales ng Meralco, nandoon yung tinatawag na generation charge, transmission charge, and distribution charge. In the Philippine power sector, iba-ibang kumpanya ang gumagawa niyan. Okay? Meralco is a distribution company. Okay? So for example lang, 100 pesos yung bill mo sa Meralco. May portion yan pang generation. Halimbawa, 50 pesos. Kunwari lang. Okay? May portion yan pang transmission, halimbawa 20 pesos. May portion yan pang distribution, halimbawa 30 pesos para mag-equal ng 100. Okay? Right? So, yung nare-receive here under revenues ay yung buong 100 pesos. However, yung 70 pesos is paid out as purchased power. Okay? So, pinabayad nila yan doon sa kumpanya na transmission, gumagawa ng transmission, at sa kumpanya na nag-generate ng electricity. So, ito yon. Okay? And the portion that is left, yan talaga yung revenue na totoo ng Meralco. Right? Because the amount that they receive, only a portion of it is attributable to their operations. The rest are attributable to this purchased power line. So that's how you look at financial statements of Meralco. Okay, the rest are the same, no? Nothing different. Okay, so what are critical ratios for electric utilities? So definitely interest coverage ratio is a critical ratio. Another is cash flow adequacy, because usually electric utilities have high loans. Okay, so a major concern is making sure that it is adequate to pay for total debt. Okay, so that's why this is an additional ratio that you can compute. Okay, of course, profitability ratios, just like the normal ones, no, and capital structure ratios, just like the normal ones. Okay, we're just saying that it is critical to look at profitability, capital structure, interest coverage, and cash flow adequacy. It doesn't mean that liquidity is not important, right? Liquidity is still important, and you can compute the current ratio. But I'm just saying that you should pay closer attention to these ratios. Okay. Now let's go to real estate companies. So this is the financial statements of Ali or Ayala Land. So if you look at this, wala namang kakaiba, right? I mean, cash, short-term investments, financial assets through profit and loss, AR, inventories, no? Siguro ang kakaiba is the main asset, no, one of the biggest assets of a real estate company is inventories. Anong binibenta niya? Right? Yung mga condos, no? Even though it is a building by nature, no? But because it is sold in the ordinary course of business, then it is considered inventories rather than PPE. Okay? Kaya malaki yan. So pag gumawa ng condo building or ng residential estate ang isang real property company, once it is completed, it's not booked under PPE. No, because its intention is to sell it in its ordinary course of business. And so therefore, that building, even though mukha siyang building, hindi siya property, plant, and equipment. It is booked under inventory. So that's what you need to realize when you're looking at the financial statements of a real estate company. Okay. Another thing, big item is this one, investment properties. Anong example ng investment property? Mall. Okay. Ano pa? Office building. Building din yan Bakit hindi yan property, plant, and equipment? Okay. Kasi may special line item under the financial accounting rules. Okay. Pag yung building, for example, is being used or not used but to earn rentals out of it. Rentals out of the asset. That asset will be categorized as investment property. Okay? Let me write it again so that it's clearer. Kanina, sabi natin, there's a building. If that building is going to be used for sale in the ordinary course of business, then that building is considered inventory. If that building is being used or being utilized to earn rentals And therefore, Ali is the lessor, which is the nature of malls and office building. Okay? Then that building should be classified under investment property. Okay? Paano kung yung building, it is for own use? For example, office of Ali. Then that building will be property, plant, and equipment. Okay? So kahit pare-pareho silang building, depende sa purpose, doon mo sila makikita in the proper financial statement item. Okay? So that's something worth looking into. So that's why if you look at inventories, no, so this account consists of residential and condo units, residential and commercial lots. No? So in a normal merchandising business, if you own a building, PPE yan, right? But in this case, because ang kanyang business is to buy and to sell residential and condo units, then it's inventory rather than uh, PPE. Okay? Itong sa baba, ito yung investment properties niya. No? Land, buildings, construction in progress. Okay? Yung accounting nito, higher accounting na yan, 114. No? So, we will not touch it in this course. Next, if you look at the revenue of income statement of Ali, hindi very different, right? I mean, it's still just like a usual P&L. So probably we just need to understand real estate sales. No? If you look at real estate sales, it is from revenue from contracts. No, with customers, hotels, resort, construction, no? And these revenues are accounted for using the percentage of completion method. Paano yung percentage of completion method? Let's look at an example. For example, a 5-story condominium project sells each of these 20 units for 10 million. No? The cost per unit is 6 million. The terms of the sale is 10% down payment with the balance paid over 2 years. Assuming all years are sold pre-construction, the revenue will be recognized this way. So pag percentage of completion method, yung total revenue over this project, okay, will be allocated based on the percentage of completion of the building. Okay? So in this case, for example, at the end of first year, 60% complete na yung building. At the end of the second year, 40% complete na yung building. Then, revenues will be 120 million for year 1 and 80 million for year 2. No? So for year 1, that's 60%, the percentage of completion, times 10 million ang selling price per unit. Okay? And then there are 20 units to sell. Okay? So that's why this is 120 million of revenues. Okay? Sa year 2, complete na 40%. So 40% times 10 times 20 units. Kaya 80 million. So the revenue is based on the percentage completion and not percentage collection. Kaya hindi relevant to eh. Yung 10% down payment, hindi relevant yan. No? Kasi revenues are supposed to be recognized based on the portion that you have already rendered, which is based on the percentage completion. Okay. What are some critical ratios for real estate companies? Of course, liquidity ratios, no, profitability ratios, and capital structure and leverage ratios. Okay, nothing different. Next are conglomerates. What are conglomerates? Conglomerates are companies wherein their primary objective or primary operation is to invest in other companies. They don't have manufacturing operations by themselves. An example of this is Ayala Corporation. So Ayala Corporation, wala siyang pinoproduce on its own as a company. Okay? Pero its objective is to invest in each of these companies. Yun ang parang nature niya as a corporation. Okay? Para siyang fund manager or investor. Kumpanya na investor. Essentially, that's what Ayala Corporation is. Okay? So, ang kanyang nature is to invest in multiple companies and does not have operations by itself. So kung pumunta ka sa Ayala Corporation, walang planta ang Ayala Corp. Pero yung mga subsidiary niya, meron. Okay? AC Infrastructure, meron yan. Okay? Itong, ano pa? Nasa ng Globe Telecom. Okay? Right? So, those are the companies na merong operations. Okay? So, that's what conglomerates are. So, by itself, Ayala Corp, no. No operations. Kasi ang nature niya is to invest in other companies. Okay? Now, because of that, iba rin yung financial statements nila. Okay? So, let's look at the financial statements of AC. If you look at the financial statements of AC, parang normal naman. Right? Parang normal lang naman. Kasi nandun pa rin yung receivables, may contract assets, mayroong investment properties, may inventories. Akala ko ba walang operations but may inventories? Akala ko ba walang operations pero bakit may investment properties? Okay? Right? Because yung FS ng AC, ang tawag dyan, Consolidated Financial Statements. At ano ang Consolidated Financial Statements? Para siyang addition of all the FS of its subsidiaries. Okay? So ito, yung 160 na inventory na yan, 160.8 billion na inventories na yan, yan ay sum of all inventories of all of its subsidiaries. Okay? Itong investment property na yan, sum yan ng lahat ng investment properties ng lahat ng mga subsidiary nito. Okay? So even though its operations is not, there's no day-to-day operations, pero sa FS, ang makikita mo is sum ng lahat ng subsidiary under AC. Sum ng financials nilang lahat. Kaya ang tawag consolidated financial statements. Okay? If you look at the income statement, ganun rin. No, sale of goods and rendering of services. Wala ngang goods and services na binibenta ang AC, di ba? Kasi it's an investor company. But if it's a consolidated financial statements, ina-add lahat ng revenues, lahat ng sale of goods and rendering of services ng lahat ng subsidiaries niya. Naka-add sa lahat ng yan. Okay? At nandoon sa total na 193 billion. Right? So that's how the consolidated financial statements of a conglomerate works. Okay? Ngayon, if napansin nyo, anong sinasabi ko? Sum of all line items of a subsidiary. Of subsidiaries rather. Of AC. So, kailangan natin i-define ano ba yung subsidiary. Okay? Kasi yung mga subsidiary, yun ang laman ng 193,622 na yan. Okay? It's the sum of the sales of all subsidiaries of AC. What are subsidiaries? Subsidiaries are companies owned by AC, and AC's percentage ownership is more than 50%. Okay? Pag more than 50%, ang tawag dyan, there is control over that company. Okay? So here are the companies na subsidiaries ng AC. Okay? So for example, Ayala Land, okay? Or AC Energy and Infrastructure, or Ayala Healthcare Holdings. Okay? So these are all subsidiaries. However, may subsidiary na pwedeng lower than 50%. Pero meron pa ring control ang isang kumpanya over it. So we won't discuss the rules anymore, no? But essentially, in general, subsidiaries are companies na more than 50% owned ng isang kumpanya. Okay? If not, pwede pa rin basta may control. Ano yung features ng control, hindi na natin di-discuss in this class. It's higher accounting na. Okay? So, pag nakita mo yung number kanina may nakita tayong number, di ba? Consolidated revenues, 193 billion. So, yung 193 billion na yan ay total ng revenues ng lahat ng subsidiaries. Okay? Pag tinotal mo yung revenues nilang lahat, 193 billion yan. Okay? Now, kung napansin mo naman sa income statement, merong isang line na tinatawag na share in net profits of associates and joint ventures. Okay? Right? Kung naalala mo sa 99.2, merong tinatawag na investments in associate. Okay? Ano yung investment in associate? We recognize the share in net income from associate. Right? Meron ganyang income statement item. At ito yon, ito yung 17.6 billion dito. Okay? So, yun ang ibig sabihin ng investments in associate. Okay? Ano-ano ang investment in associate in this financial statements? Okay? Ito yon. Okay? So, ang BPI, associate lang yan ng Ayala Corp. Kasi they only own 32.9% of that company. Globe Telecom, associate lang yan ng Ayala Corp kasi 30.8% lang ang ownership. No, ano pa bang sikat dyan? I think yan lang yung sikat. No? Ortigas Land, 21% lang ang ownership. Light Rail Manila Holdings, the operator of LRT2. LRT1 pala. LRT1. No, 50% lang ang ownership. Okay? So in that case, equity method ang gagamitin and therefore you just recognize the share in net income. At dahil yung profit and loss ng mga kumpanya na ito ay nasa share in net income, hindi sila kasama sa consolidation. So for example, in our example, sa revenue na 193, hindi kasama ang Globe dyan. Kasi yung net income ng Globe kasama dito sa equity share in net income or sa share in net profits of associates. Okay? So that's how it is accounted for. You have to understand it so that you can understand the numbers. Okay? So another information that's very useful is segment information. Okay? Merong sa notes to financial statements, meron palaging operating segment information. Okay? Nakalagay doon yung breakdown ng consolidated numbers. Okay? So yung 193 specifically 236 dyan ay revenue ng Ayala Corp itself. 85,970 dyan revenue ng real estate segment. 56 dyan ay net income galing sa electronic segment, etc. So it gives you an indication of sino ang driver ng isang consolidated business. So it's good to analyze this aside from the usual financial ratios that you are computing. Next, another critical item is breakdown of loans and parent guarantee. It's usually in a note called commitments. So dito lang magandang malaman kung meron bang support na binibigay ang parent to its subsidiaries. No? So that's the information that you get out of this. And next is related party transactions. Ito yung mga receivables and payables ng parent with its associates, joint ventures, and other related parties. Okay? Again, related to the concept of financial support to subsidiaries. Okay? We want to know kung aling mga subsidiaries dyan ang hindi kumikita kasi kailangang mag-extend ng pautang ang parent sa subsidiary na yun. So, yun ang ibig sabihin nito. Okay? So, pag receivable yan, ibig sabihin, the parent has receivables on these companies. So, pinautang ng parent ang mga kumpanya na yan. If there are payables, yung mga kumpanya na yan, pinautang naman ng parent. Right? And therefore, may support na binigay ang those subsidiaries to the parent. So, yun lang ibig sabihin yan. Okay?